Institutions reveal their hand in the first 15 minutes of the trading session. If you know how to read it, you can trade with them and not against them. The opening range strategy is far more than a simple retail breakout setup. When used alongside institutional filters like the VWAP, it enables traders to position ahead of large-scale moves driven by algorithmic trading, dealer hedging, and fund allocation flows, all within a clear rules-based framework. In this lesson, you will learn how to use the opening range breakout strategy to define opportunity and VWAP to validate conviction. This is how professionals navigate the open, not with emotion, but with a clear structure and edge. But before we dive in, if you want more strategies like this one, make sure to subscribe so you don't miss the next lesson. What is the opening range? The opening range refers to the high and the low formed during the first 15 minutes of the RTH session, and that's 9:30 to 9:45 a.m. Eastern Time. Why is this important? This is important because that's when institutions often reveal their intent, with aggressive position, sudden volume spikes, and early directional buyers all emerge within this critical time window. Let me show you now in the charts in TradingView how this looks like. So you have the opening range. So this is the RTH open, also known as the regular trading hours. So this is the open at 9:30, and then you have 15 minutes. So each candle here represents 1 minute. And then during these crucial and critical 15 minutes, we want to mark the high. So this is going to be the opening range high. And then we want to mark the low. The low, it's still this one here, and that's the opening range low. So this is the opening range 15 minutes high and low. So if we were going to look at a candle, this would represent 15 minutes, okay? Now for the strategy. Once the opening range is set, the 15 minutes, we wait for a breakout. But instead of taking every breakout, we apply one key institutional filter, the VWAP alignment. So we go long if price breaks above the opening range high and is above VWAP. This filter avoids false breakouts and aligns us with the institutional momentum. Let me show you what VWAP alignment looks like in TradingView. So here you have the open of the session and the 15 minutes. We will plot the VWAP. In this case, it can be an anchored VWAP to the beginning of the session. And once we have the criteria being met, meaning break above the opening range high in this case, and VWAP alignment higher, once we get the close, we can go long and target the 1.5 size of that opening range, 15 minutes. Okay, in this case, we'll be all the way up at 23,631. Inversely, if we have a breakdown, let's say price is breaking below the opening range low, we want to see that VWAP institutional alignment below price. Okay, so we want to see price below that VWAP, and we want to see the VWAP pointing to the downside. Okay, we get a 1 minute close, we can then go with that breakout. The invalidation for the trade will always be the opposite side of the opening range. So in this case, if we take the long here, so we're going to have a long setup that looks something like this. We go from the opening range breakout, we target the 1.5 times the size, and our stop will be below the opening range low. However, more often than not, you will find that this will still be quite a wide range. You have two options. Option number one, you can reduce size and still take the trade or trade the micros. Option number two, you can use context, other levels, or reduce the take profit and the stop loss a little bit closer. I personally like to do the number one, Okay, so instead of being 1.5 times, I like to go for the 1 time the size, but my stop loss to be tighter. And I like to use the 50%. So I will be monitoring the price around the 50%. But the standard opening range breakout strategy, you have to use the low. And for that, use smaller size or reduce your risk. Why VWAP matters? VWAP acts as the session fair value. It's a key benchmark used by institutional traders to execute large orders with precision. When price holds above VWAP, it shows buyers' control. Below it, selling pressure. Aligning your trade direction with VWAP means aligning with institutional flow. Okay, so VWAP, super important to use with this opening range strategy. Let me talk you now through a real trade example using this method on the NASDAQ. So on this day, we have the market breaking below the opening range low. This is the 1 minute chart, and we have the opening range at 23,668 and the opening range low at 23,587. So what I've done here, we've seen the break, quite an extended candle. And this is what I was saying earlier about having the stop on the opposite side. That would be quite a lot of risk. So what I like to do, I like to use candle structure to be a little bit more on the risk side and follow the trend. So here I don't want to miss the trade because obviously the initial range is too wide. So I'm even going slightly below. You can see VWAP alignment is down. It's actually, price has actually run quite far from VWAP and it's quite below the opening range. So we had the breakout. I was looking for a limit order. I wanted to see a potential retest. We never got it. Let's be real. Trading is not that simple. So what I'm doing here is waiting for price to come back inside. Okay, I'm waiting for price to give me a retest of that opening range low. You can see I'm still not quite sure here. Are we going to take the highs here, reject, or are we going to go all the way up to the opening range low and potential VWAP? So stop is still, I'm still tweaking my stop there. So the 1.5 times this opening range sits all the way down at 23,469. And there you go. I'm filled on this position. And now I'm pushing my stop loss slightly above this range high here. Again, you can use the total opposite side of the opening range, and that would be the correct side or the correct parameter here. However, when trading the NQ, especially the minis, you know that the risk is going to be quite great. So I prefer to go with a tighter stop and follow that momentum down into the next levels. And if you remember, I said that that one level is always my preferred place to take the trade, but you can't be shy of $1,000. So, you know, it's very much like see profits, take profits. As a day trader, that will be your bread and butter. I've closed this trade. However, I acknowledge that we have not hit that 1.5 times, and I'm going to go back into and risk a little bit of that profit that I just made, and then try and take the trade all the way to the 1.5 times opening range. So here again, I'm waiting for that retracement back up to the 50% and stop very much nearby. So opening range VWAP still pointing down. So we're going with institutional order flow. Trending is lower lows and lower highs. We have not hit the 1.5 times the opening range. And here I'm trying to again go with the second trade for that 1.5 times the opening range. So currently just managing my stop loss back to the 1 minute high and checking what other levels I have on my chart for potential take profits and just managing this stop accordingly. So waiting for this 1 minute candle close, and there you go, and then moving my stop just above that 1 minute high. And here's a 1 minute candle closed, keeping the stop just slightly higher there, and then moving it down as price is near target and boxing in the last portion of the trade. So as you can see, this is how I use context and VWAP and market structure to frame these trades around the opening range breakout. What makes this strategy powerful is the balance it strikes between structure and conviction. The opening range gives us timing and clean, predefined levels. VWAP confirms sentiment, showing us if the market agrees with our breakout. So, most retail traders lose money in the first few trading minutes just by jumping in too early. But by waiting for the opening range to form and the confirmation with VWAP, you're stepping in after the institutions have shown their hand, not before. You're not guessing, you're aligning with structure, sentiment, and value. And to conclude, mark your levels, follow your rules, track your trades. The fastest path to consistency is turning structure into a habit. See you on the next one.